My name is Yalin Zhu. I'm the director at the TCFA. I have invited 6 friends today to share their insights on the investment in technologies, including fintech, real estate, semiconductor, meditech, and other sectors in the US and in China. Among our guests, we have fund managers as Mr. Adi Abulali, President of Protege Partner, Mr. Xuan Chen, Manager Director at Hope Arm Innovation Fund, and former investor who left the financial industry and started their own business, as Mr. Li Lin, CEO at RandHop, and Mr. Zheng Wang, CEO at DataYes. In addition, we have Senior Manager from China Unicom, Ms. Lili Xu, and Senior Management from Healthcare Industry, Mr. Jin Hu, who is CEO at the Gloria Group. We have a diverse group. Now I give every speaker 1 to 2 minutes to introduce yourself.
Hi, this is Adil Abdulali. I'm President and Chief Science Officer of Protege Partners and Move 37. So Protege Partners is a seeder of hedge funds, traditional strategies, and Move 37 was started 2 years ago to capitalize on the confluence of events that we believe is going to change asset management forever. And this is really the growth of alternative data, data science, machine learning, the cheap and available computing available on the cloud, and some blockchain technologies. And all of this is going to change investment management, and we started a company to seed and incubate asset management companies, taking advantage of those factors.
My name is Jin Hu, and I'm a CEO of Gloria Group, and we're based in Beijing. We are controlling 2 public companies listed in China. One focuses on the healthcare, more on hospital side. The other one is on the pharmaceutical side. So this year, we're expecting our revenue would be over 10 billion RMB, and our net profit would be over 1 billion RMB. So we're doing okay in China.
Hello, everyone. My name is Lily, and I'm from China Unicom Americas. I think many of you guys may already know that our parent company, China Unicom. But today I'm here we are the leading company, leading telecom operator in China and Asia. But today I'm here just want to talk a little bit more about who we are here and what we did in the US market. China Unicom came to United States around the year 2002, and because we saw the great business opportunity bring by the booming of globalization. And through around 16 years development, we have already built a network cover coast from coast in the United States. After 16 years development, again, today we already become a trusted international telecom partner for our enterprise customer. And we also launched our very unique mobile services, say unique, in last year, year 2017, and to meet the needs of retail service sector. And today, we also bring a customized product and solution for you, the financial industry. We understand that, the low latency is very important for the financial, some kind of financial transaction. So we have designed and dedicated design and build a ultra low latency network. So if you guys want to know the more information about these 2 products, just come to our exhibition table outside. Thank you.
Thanks for the invitation by TCFA. I'm Xuan, and by training, I'm a computer scientist and started working actually from China Telecom. So I was talking to Lily there, a few people we know back to the old days. And then I came to the States and get some study and also joined Microsoft in Seattle. So I came yesterday from Seattle to here. At Microsoft, we did the last project I did there was to land Windows Azure, the cloud service in China, get the business started. Interestingly enough, the first customer was Coca-Cola, Asia Pacific. And after Microsoft, I joined a company called ARM. In this audience, I think probably there's only few people know this company. It is very unique. It has a very unique product, which is in semiconductor business, we call the core compute IP. So in terms of the, everybody knows in the PC era, it is Intel and Microsoft that host the industry. But in the mobile internet era, ARM actually replaced Intel. More than 96% of the CPU in the smartphone everybody has, at least one at this moment, was based on ARM architecture. And if we are talking about the broader mobile device industry, ARM has 86% of the market share. We cumulatively shipped 130 billion ARM-based chip since we were formed 26 years ago. Last year, actually 2 years ago, we were acquired by SoftBank for 32.4 billion. That was the number 3 largest acquisition, happened in 2016. I joined ARM 4 years ago, running their strategic investment for Greater China region. In that capacity, I also found Growth Stage VC fund together with a prominent partner, which is Hopu. It's a very low-key financial institute, but it did the IPO, China's first IPO, which is China Mobile, and many prominent deals. So I can see that in my 20-plus year career, I work for MNC and help them to start their China business. Now I'm actually working for a fund mainly formed by Chinese investors trying to do cross-border investment. So that's basically my background.
Cool. So thank you for having me again. My name is Li Lin, and the first part of my introduction sounds a lot like Mr. Chen. Funny enough, I was a computer science and math undergraduate and grad school at MIT, and this is going to date me a little bit, but I did my graduate research in reinforcement learning. But the problem is, 15 years ago, AI promised to do a whole lot and didn't actually deliver much of anything useful until much, much later. And today, it's interesting to see how much technology has transitioned and our ability to process and run algorithms and really make sense and use data has improved. So after college, I was actually at Seattle as well. I was in Redmond as a software engineer at Microsoft, and it was a fun place. I loved it, but I can promise you that at the time, I was a young, single 20s guy, and New York City is a lot more fun. And so I moved to finance, and I was a quantitative analyst and trader at D.E. Shaw, and later on Two Sigma, also doing systematic trading strategies. And even then, I think artificial intelligence and machine learning played a role, but not nearly as large as one could then. And we could talk about it a little bit later. Later on, I founded a startup called RentHop and also RealtyHop, and we use machine learning and deep learning techniques to really simplify the decision-making process of searching for and transacting real estate.
Thank you. Hi, good afternoon. My name is Ren Wang from DataYes in Shanghai, China. I think on the screen there is a typo on our Chinese name. The Chinese name is not Liantong Suji, it's Tonglian Suji. Otherwise, our China Unicom will have, IP issue. Anyway, I'm a physicist by training. Then I switched to finance after my research work for a couple of years. held several positions as a researcher, portfolio manager, and a chief investment officer at Bloomberg, BGI, now a part of BlackRock, and also Bosera, fund management company in China, which is one of the largest mutual fund company in China. In 2013, Dr. Xiaofeng and I co-founded DataYes, an investment technology company with focus on integrating alternative data technologies and the investment knowledge to build a cloud-based investment platform. The company is headquartered in Shanghai with the office in Beijing, Nanjing, Shenzhen, and here New York City. We have roughly over 400 employees in investment research, data science, and application development. Many of them actually have the interdisciplinary trainings in investment and technologies. Our company has built like an open platform, intelligent research technology, using the alternative data and also the technologies like natural language process, knowledge graph, and machine learning, and so on. We have been serving over 1,500 global institutions, including customers in New York City. Recently, our company also been rated as one of the top fintech company in China by KPMG as well. Okay, that's a quick introduction of my company.
Right, thanks everyone. So our topic for discussion today is this the end of globalization? And then what's the impact on investment in technology sectors, or what's the impact on the technology sector itself? So Trump, our President Trump, he liked to tweet. And he tweeted, tech giant should make products in the US if he wanted to avoid tariff on Chinese imports. So that attitude never showed by any administration before. In the last 2 decades, technology is sweeping the globe and drive us to the peak of globalization. And today, because of the geopolitical power shift, we may have reached the reflection point. So my question to the panel is, do you agree that we have reached the peak of globalization, or do you think there is a de-globalization in your sector of focus? Adil, please.
So in investment management, the globalization trend is always been there. Investing is a global enterprise. It used to be from a risk management standpoint, a diversification standpoint. I mean, the home country bias was abandoned a long time ago, and people started to invest on a global basis. What's happened now is that the investment management is being overturned and reshaped by the growth of alternative data, which is also a global phenomenon, and technology, which is, again, much more global than local. So if anything, the actual evaluation of a company as an investment, whether you're in the US or whether you're in China, involves figuring out what that company is up to around the globe. And the way that people can find out about that company is not to go to the headquarters of the company and try and speak to management. The way that they find out about the company is to go look at the data that drives the supply chain and look at the data that drives the people who are buying products from the company around the globe. And the people doing this, the data scientists, they don't really matter where they sit. They don't have to go and visit a factory to see employers going in and out. They can read that from looking at sort of hyperspectral satellite images and look at stuff going on all around the globe. There's economic activity that's found through satellite imagery. There's trade data that's gotten from looking at ship manifests and looking at how heavy the wake of ships are traveling around the world. So if anything, all the political nonsense can be forgotten, because any investment manager, whether it's quantitative or fundamental, has to take a completely global perspective, because most companies are in fact completely global.
Well, I totally agree with Adil. I mean, I think globalization might be the most popular economic terms in past few decades. We're talking about a lot. I personally think maybe the peak of globalization will back to 10 years ago when we have the financial crisis. But regarding my sector, I mean, we are in healthcare, but I think in healthcare still it's under the process of globalization. So it depends on which perspective you're looking at. For our sector, I think, especially, I mean, if we're based in China, I think we still talk about globalization. So it might be different. However, when we are doing the merger acquisition in past 2 years, we figure out it's much easier with doing the acquisition if we acquire a company in Japan, Korea, and Europe, and compared to acquire a company in US, it's much more challenging and difficult. And even now, for us to, if we bring some product from US to China, it's getting more difficult. So I was thinking, I mean, it really depends on how we look at.
Yeah, well, from my point of view, I think, technology itself do not have any national boundary. I think that, any new technology is created to meet the human beings' requirement or meet the human beings' needs, either to improve our quality of life or solve some common problems. So therefore, the new technology will be diffusion globally once it has been invented. So no, I think no one can prevent this kind of diffusion for technology itself. And even we can discuss probably now some kind of sector like manufacturing or some service sector has kind of a localization trend. But those kind of localization trend basically I think also need to be implemented on a global access platform. More specifically, it must run on a global access information platform. So from that point of view, I think from technology itself, it definitely do not have the globalization trend.
So I think I share the view of the three panelists prior to me. From a technology perspective, certainly we see a lot of globalization happening in the past 20 years, maybe. I mean, just look at BAT and other companies, right? And we see China Unicom come to U.S., and I myself get Microsoft Cloud service started in China. However, I want to share some of the more, not that optimistic view in this panel. So if I put up my investment hats on, I do see that with the incidents happened this year, and certainly there's a tied up in particularly Chinese capital coming to the States. I don't think it's a news anymore. About a month earlier, I was in Silicon Valley attending a few panels there. The view was very different from a year before, and not mentioning 2 years before in terms of cross-border investment. People talking about the new regulation, and as you may know, the latest FIRMA and pilot program identified the sensitive technology areas, which essentially, I think, are common areas. Any so-called tech investor would love to look into anywhere. And now it is not very clear where this regulation is going. So from that perspective, I think a lot of investment, and actually this certainly affect Chinese investors a lot. According to data, I forgot the source, but the VC/P investment in tech sector at least dropped 90% this year from China to US. And I talked to people like Fusan, Alibaba, Baidu, and a few others who's very active. They are now thinking about different structure or easily. One of my colleagues basically say we can look somewhere else. So that's basically what's happening. And it's very disappointing at this moment. And this does not just affect China investors. One of my colleagues who's running the venture investment arm for a big German company. People can guess who that is, but they are pretty big. Their attorney won't give them warning as well, because money from Germany is also subject to the new regulation. So from that perspective, we do see barrier has been building up. However, we would love to see more positive development from the regulatory front, so that the free flow of capital, as my panelists mentioned, which we believe will mutually benefit both US and China, will continue.
So in the quantitative investment space, intellectual property, of course, is king and has always been the key. With respect to globalization, it's kind of taken a very new form in recent years. If you think about it, we all have heard of the famous cases where traders have gone to jail for allegedly stealing code, or if there exists a profitable formula or just a few lines of code that can be stolen by just one person, and that's so dangerous, that makes for a bit of a fragile business where you have to be so careful protecting and securing your intellectual property. Now, what's new, what's changed from that is we're moving into a world where the actual humans who have really designed and trained and calibrated these trading models, as we know for anyone who has familiarity with deep learning, you are actually training in entirely new ways where the humans themselves don't actually need to know what the system's learning. They don't necessarily know exactly why it works, just that when we give it enough data and when we set up the lab in the proper way, it's able to trade profitably. Now, I'm not sure we're exactly there yet, but it's a scary new world when, okay, now we're not fragile because one or two people who wrote the code know exactly what to steal, but now it's about securing the actual histories of data, the way we train it, and that entire process of siloing the data. I think there's also a lot of room for some new kind of rethinking legislation around how to protect this. Right now we have a lot of copyright and trademark and maybe even patent laws where you can protect specific ideas or specific pieces of, I guess, data from being published elsewhere. But now, what if I never actually publish this? I just steal everyone's data for use of internal trading and create something that'll never actually make it to the light of day. How do you even know who stole from you or who to sue, right? So I think there's a lot of thinking to be done in the coming years.
Okay. I basically agree with all the speakers are talking about. I agree that the globalization of technology will continue, even though there is a short-term setback. But there will be some kind of like legislation helping protecting the IP. I would like to add a little bit more on the deglobalization. I think there are actually probably with the in the near future with the technology in advance, there might be deglobalization happening. The reason is that the new technology is going to remove a lot of barriers One of the example is like a 3D, AI, and robotics will slowly replace the human labors. So then in the future, we do not have to manufacture a product in a very low cost labor region. So we can, manufacture a product in anywhere because the cost is about the same. Otherwise, we have to pay the additional shipping fees. So that's going to reduce the trade between the regions. I think this is definitely probably one of the things going to happen. Another example is, for example, as the AR becomes more mature, then there are probably less travel around because we don't have to come to New York City to attend this TCFA meeting because we could attend this in Shanghai. So there will be less travel around. So I think this is definitely going to be driven by the technology development in the future.
Great, thank you. So we hear different views from the panelists. But globally or locally, technology will continue to evolve. So in your sector of focus, what do you think is the next big wave? And can you share some exciting news in your sectors with our audience?
So in the investment management world, the current state of technology is such that it's really changing the very fundamental ways that we've been investing up till now. And I mean, the big sort of aha thing is that before fintech, technology, all of it was essentially a back office efficiency type stuff or a middle office risk management thing where things were automated. But what's going on now is that this technology and the ability to make decisions is moving to the front office. So rather than technology being a cost center, is going to become a revenue generator right off the bat. And this is really possible because of some of the advancements in deep learning, AI, and data-driven type machine learning algorithms out there. And it's not sort of one thing that changed that suddenly made this possible, but a confluence of a lot of things. And some of the key elements of that are the sort of growth of data, alternative data, structured data, unstructured, non-financial data, websites, images, all of that is exploding. Along with that is a whole class of people, engineers, called data scientists that didn't really exist that much before. And these data scientists can deal with all this data it's really not possible for MBAs to deal with this data. This data doesn't fit in a spreadsheet. You can't play with it like that. You need data science to deal with it. Machine learning, sort of these neural nets and things that Lee alluded to, I mean, those neural nets have been around for decades, but they didn't really work because there wasn't enough computing power or data to power them. So it's the combination that allows really decision-making to move from a human domain to a machine domain. And what's happening is that the old hypothesis-driven investing, where a human being came up with the hypothesis, tested it against data, that was the old scientific method, and then when it worked, they would deploy it in a quantitative or systematized fashion. But the ideas were human, they were explainable, they were anchored in behavioral finance or economics. Now you have the human being part of this new investment paradigm to be just somebody who sets up a particular architecture, whether it's a neural net or a Bayesian network or some type of tree search model. And then the human being doesn't come up with the parameters. It just feeds it data, and by reinforcement learning or some other such trick, the parameters are set and driven by the data, and the solutions are then evolving as new data comes about. So it doesn't have to go, it doesn't break and go back to the research lab. It sort of evolves as it goes. And so a lot of the criticism of sort of algorithmic trading and all that is, the markets they're not solvable by these machine learning algorithms because they're non-stationary and all that stuff. But my take is that the actual architecture of these models are non-stationary to begin with. They're evolving as the data comes in. So in fact, they adapt a lot faster than human beings do. And so we've seen quite a bit of success in small groups of people coming up with trading technologies built on data-driven strategies that are potentially not explainable by human beings very well, but they behave very well, and they don't look like other investment strategies. So they're not crowded, they don't look like momentum or value or anything else. And these are the types of things that's the most exciting in investment management right now.
That's great. So I guess we only have 8 minutes, so I cut my part short. So regarding the healthcare industry, I mean, if we do a comparison between US and China, if we look at last year's data, 9 out of 10 the best-selling drugs in US are biologic drugs. Well, in China, I would say they are all traditional Chinese medicines and chemical products. So you can tell there's a big demanding regarding technology and innovation in China. So for my company, we partnership with Wuxi Pharmacy, which is called Yaoming Kangde. And if you look at Wuxi Pharmacy, 2 years ago when they did the privatization from US market, their market cap is only $3 billion. US dollar, and we did some investment too. So now, after a year and a half, their market cap is over 30 billion US dollars. So you can tell there's innovation and technology is very, very important now in China.
Yeah. I think that is a great question, especially for the telecom industry. According to the global research company Gartner, that the business model of the telecom industry has been totally disrupted, one of the most disrupted industry in the recent 5 to 10 years. So our company also switched our business model as well. So in addition to our traditional telecom, services like, data center or whatever the IT services. Currently, we also provide some sophisticated IT total solution to our customer to adapting the new technology like data, like cloud or big data or other more, new technology. If I need to choose one word for in the telecom industry for the new technology, I have to say that it's cloud. So now we are working with many customers in different industries to help them to catching this kind of technology trend and to helping them to move those outdated IT platform to the cloud. Like all the panelists mentioned, data analysis or whatever, then all this can be happened only on the cloud. So that's what we did today.
So since Lily already, from a technology perspective, take the topic down to the what we call the stack into the infrastructure layer, I'll continue. I'll talk about what empowered infrastructure. At the very end is the semiconductor.
Yeah.
Those are the chips. And based on our experience, I just mentioned that cumulatively we shipped 130 billion ARM-based chip together with our partners. We see the second, actually the first 10 billion happened about 10 years. So it took us and the partner 10 years to ship 10 billion ARM-based chip. But guess what? In past 4 years, there are another 10 billion chips, ARM-based chips shipped. Only in 4 years. And now we see that maybe in the next 1 or 2 years, another 10 billion ARM-based chip will be on the market. So it's going to be everywhere, from your device to the data center to your cars. Cars actually has now 10 CPUs running, and we estimate going to be hundreds there. And it's going to be everywhere, so that Masayoshi-san, our big boss in SoftBank and the head of Vision Fund, has this vision of 1 trillion smart devices connected together. That will drive a lot of growth in semiconductor business. And one thing exciting to us is a lot of this growth is actually happening in China at this moment.
So people always ask me why technology has not yet disrupted real estate a lot in the last 10 or 20 years. And what they really mean is, why do we still have brokers? Why are the commissions still so high and painful when you sell a house or buy a house? And here's one of the reasons. If a broker does a job too well, you actually hate him more for it. And here's why. Imagine you go with a broker, and on the very first weekend, he finds the perfect house, and it's a great deal, and you sign that weekend, and you're done. And even though that's the best he could have possibly done, you actually feel like it was too easy, like he didn't really earn the commission. And the analogy I like to give is the best chess player and Go player in the world is a computer, not a human. But if you're like me, I've never had fun playing against a computer in chess. And the reason is I'm very bad, and it just beats me right away. Or it's one of those awful airplane chess programs that loses to you on purpose, but it makes these horrible mistakes that just doesn't feel human. And so a much harder program to write would be one that evaluates how you're feeling and how good you are, and still loses on purpose, but does it in a way that you feel like you won out of your own brilliance and creativity. And in a way, that's what a broker does. They're kind of reassessing you as you work with them, and the one that struggles with you weekend after weekend, going to all these open houses and showing you a dozen or 100 houses over 2 months or 4 months, you're like, oh wow, that was a great broker. And so if a program can capture this kind of human emotional hand-holding process, that is much more powerful than what we have today in most AI systems.
I think InvestTech is a relatively new area, but it's not new that the technology has been the driving forces of innovative products and investment approaches. I think quantitative investment approach has been very successful, and many hedge funds has been adopting this strategy. The technology have provided the possibility of collecting more data and new data, and also store all the data for our investment research and portfolio management. One of the challenges is how do we find the data we need. We need a smarter search engine, and how do we know what data changed? Because we need some more intelligent monitoring system to do that. So the InvestTech basically trying to help in these areas by building the technology to collect the data from a variety of sources, and also extract the information from the unstructured data, and building the knowledge graph using our investment knowledge, the human knowledge, and also build an AI-assisted research framework and a machine learning-powered investment decision. So by combining all this technology, we can build a more intelligent research platform that definitely going to help our investment managers. Our clients have seen the value of this platform, and I believe this will be the future in the next decade.
Great, thank you. I intended to ask the third question, the last question, whether you think blockchain technology will revolutionarily change your sector. But since we run out of time, we will save that question for later. So while it's hard to predict where the global power shift will lead us to, and we will wait and see how the trade war between China and the US will end, and whether there'll be loosened policy on the cross-border investment. So panelists, thank you for your participation, and audience, thank you for your attention and then patience. That's the end of our panel, and I wish everyone a great evening. Thank you.